Billionaire Barry Sternlicht offered a crazy prediction about America's regional banks amid a coming commercial real estate reckoning. And I have to say, this is something we've been calling all along, but perhaps not with the same conviction that Sterlich said recently, which to me was pretty eye-opening. Now, back in January, I predicted a bank failure within the next 90 days, and I'm patting myself on the back because it happened. In April, Philadelphia-based Republic First Bank was shuttered by the Pennsylvania Department of Banking and Securities. Yes, totally shut down. Now, the small lender had approximately $6 billion in total assets and $4 billion in total deposits by the end of January. The FDIC estimates that the cost to its deposit insurance fund related to Republic First Bank's failure will be $667 million. It's the first one in 2024. Now, Barry Sternlicht, who's a billionaire who runs the Starwood Capital Group based here right near me in Miami Beach, has had an amazing financial career and has amassed a net worth of over $1 billion. Pretty impressive. The guy knows what he's doing. He's in the markets. He's in all sorts of businesses, and he's sharp. He thinks real estate's primary lenders, the regional and community banks, could soon be bearing the brunt of high interest rates and inflation. Now, this is crazy. He had this moonshot of a quote last week that just solidified everything that Greg and I have been telling you about the shape of the U.S. economy, and we are not in a great place. I know you hate doomsday stuff, but we're just factual guys. He quoted, "You're going to see a regional bank fail every day, or not, every week, maybe 2 a week." That's exactly what he said. Can you imagine what that will do to the stock market? There were only 5 bank failures in 2023, which led to a brief market crash and tons of gold buying. This is when it started. Yes, it is. This was the catalyst to the recent surges in gold prices, with central banks leading the charge. They were buying it up last summer when these banks collapsed. And I don't know about you, but when the central banks are buying gold at record numbers, that's all you need to know about the state of the United States and global economy. I don't care what the S&P is doing, because market makers will drive the markets way up, and then they're going to dump on us. The amateur investors like you and I, we could get dumped out overnight, which is largely why I stay out of that game and invest in precious metals in times like this. Not always, but in times like this, yes, I have precious metals. You see, the central banks buy gold when they sense market turbulence, geopolitical turmoil, and overall market uncertainty. Right now, we've got wars. We've got inflation, which we can't get over. And now an election just months away. So it's a very good time to start diversifying everything, even your retirement. There's a link below if you want to add gold or silver to your retirement, just like Greg and I did. We've talked about it in many, many videos. Or you can just gamble with this billionaire saying and say that he's dead wrong and see how your current holdings play out. Just let it ride. See what happens. Now, I'm too old to gamble other than on blackjack, which I like to do for fun. That's just a fun thing. I don't play for a lot of money, but, I like doing it. One thing I do not gamble with is my retirement. I wouldn't dare do that. That's my nest egg, my future, my life in the future. Now, back to his lofty prediction. There are more than 4,000 regional and community banks throughout the United States, many of which do not have the cash flow to handle major loan losses on real estate debt. It's just a fact. Problems have been pummeling the entirety of the real estate sector, but commercial real estate in particular has been struggling due to the rise of remote and hybrid work. People are moving out of office spaces. I see it right here in my hometown of Weston. And this leads to more and more vacancies. Right here in Weston, Florida, UKG, huge company, took everything to India. Many buildings are sitting here just idle and vacant and ready to sell or rent out to the next person who wants to jump into them. Now, Sterlich has been ringing the warning bells for more than 2 years, calling the situation, quote, an existential crisis. In a January Bloomberg interview earlier this year, he predicted that $1 trillion of losses on office properties alone. Those are coming. They are coming. That's what he says. In the Tuesday interview he did last week, Sternlicht said that Fed Chair Jerome Powell's ongoing rate hikes will continue to have consequences in the real estate sector for the foreseeable future. And I quote him again. He's got a hard task with a blunt tool, and the consequence is the real estate markets are taking it on the chin because rates rose so fast. We could have handled this, but we couldn't handle it this fast, Sterlich said. And I quote him again, the $1.9 trillion of real estate loans, that's a fragile animal right now, end quote. Now, so far, only one regional bank has shuttered, which I just talked about since the start of 2024. Last month, the Federal Deposit Insurance Corporation seized $4 billion in deposits and $6 billion in assets from Republic First Bank, the one I talked about in Philadelphia, which was a regional operating lender in the Northeast with significant commercial real estate holdings. Key word there, they're holding commercial real estate holdings. I'll say this, these predictions lofty, very lofty. It's almost like picking a long shot to win the Kentucky Derby if we're putting it in those kind of perspectives. But let's just say he's wrong. Let's say a regional bank doesn't close every day or every week. Let's just say it's one per month. That's still going to lead to a huge run on banks and a huge cashing out of the stock market. It's inevitable. It's just going to happen. Portfolios will collapse. If you are near retirement, can you afford this? If you aren't near retirement, you want to wait for your account to rebound? Potentially, of course. When we get out of the mud, things are not so hunky-dory. We've been saying that for months. So whether you buy gold or not is your choice. But we've been stacking it for a while now, and we've seen an over 30% rise in just the last year. Our retirement's sitting pretty, and I feel good about it. If you want to play it safe, you should too.